Welcome back to my channel. My name is Apoorv and this is Wealthify. And the motto remains let's get rich together. So, as promised, I was going to share the second video where I was going to help you understand how to use charts and how to use chart patterns to make profitable trades. But I realized when I posted my IPO theory last week, there were a lot of comments around, oh, should we buy right now? Should we hold? Should we sell? People were not clear, especially in this time right now when there is a lot of broader market sell-off happening, especially powered by FIs. And there's a global uncertainty with what will happen in the from a budget standpoint and from other factors that are right now driving Indian market. And I realized that people are missing understanding the fundamental thing, and maybe that's the reason why they are being so skeptical. They are being so emotional about it. And I thought let's try to help this first, and then we could there, like I said, there are going to be more weeks where I'll explain how to trade. But it was very important for you to understand what to do and what not to do, especially. And that is being driven by just one framework which I have been following throughout my life, irrespective of the stock market, whether it's in general, professional, personal. My decisions are always backed by the framework which I call as managing your outcomes from your predefined ob- objectives. So, which means you have to marry that. Once you decide an outcome, you need to ensure that this was backed by your original, whatever you intended when we were thinking about doing this journey. Easiest is think of it as a train journey. A train is going for 20, 30, 50 destinations during this one trip. But if you are onboarding at destination and station number 20th, you don't care if the train is going further because that was your destination. And that is for which you have taken the flight. That is for which you have taken the ticket. So similarly, stock market may there are multiple uh, points of exits, and you decide that when you are thinking of buying a particular stock, and that's the reason why. So when you do that, you'll always be in less emotional state because you know that I am going to sell the stock only if it does 100%. So you don't get worried or you don't get emotional, you don't get crazy about whether it has made 20% in a day or it is there for 7 months and you have not done anything because your target was decided. And most importantly, what you also do is you try to understand in order to achieve that 100%, what is the realistic time frame? So what going to do today in this, so bear with me, it probably will be a little larger, longer video, but I'll try to include all the important things so that it helps you be calm in every situation. Right now, it's a bearish rally happening, and there will be a bull rally also. And in both those situations, you need to stay calm. And then can be a 2021 style consolidation that could happen entire year, and you need to be okay with it because you have done your homework. You have decided what good looks to you, what is your outcome, and you are marrying that with your predefined objective. So let's start. So all of this is done through what I call as phased theory. Whether you are entering, whether you are waiting, whether you are selling, you can do phased entries and phased exits so that it can take care of the three prominent uh, emotions when you are trading, especially in stock market. These three are obviously, if you've heard me talk a lot, I've tweeted about it, I have used this in my previous videos. I've also shared this in a lot of comments in past. These are fear, FOMO, and greed. So all of this, so fear is predominantly when you are trying to enter the stock and you're like, oh, maybe it can fell further. Or if you have entered and you're like, oh, should I sell because I can see a 5% more correction happening. So fear is being taken care of when you start thinking about phased entries. FOMO is when you know there is a broader market rally happening and you're like, oh, maybe should I wait for 20 more percentage? Or should I enter now? Maybe there is a 20% more upside happening. So often people enter uh, that stock when out of fear, out of FOMO. And greed is when you have entered, you are in a profitable position, but you be like, okay, can I wait for 10 more percent? Can I wait for another 10%? Can I wait for another 10%? And that greed never stops. You never book profit, and then you see a fall, and you're like, oh, I should have sold at that point. And this is happening right now, right as we speak. A lot of people are like, oh, I should have sold that particular stock at X price. So guys, that can be so you can take care of that when you follow the phased theory, and which is underlined or underpinned by the theory of marrying your outcomes with your objective. So let's understand how to do that. So this is easy. This is a easier part. Now comes the tougher part, and I want people to know that there are many ways you can trade. uh, I have divided it into five bigger buckets, and I'll try to help you understand how to trade based on these buckets. So let's start with the biggest one, which is long term. So my long-term bucket basically means a very, very long-term kind of goal. Think of it as the coffee can investing, where you are buying, you're forgetting and not forgetting, you're just looking every year and seeing, or maybe every quarter, seeing how is the growth. Is it as per what you were thinking? Maybe there is a bad month, maybe there's a bad quarter, maybe there's a bad year. But your vision is a longer term. For me, it's my daughter's say. For me, it's my retirement, my daughter's marriage, something else, maybe uh, taking care of my home loan, which is going to happen in 20, 30 years. So for me, long term means anything that has to do with more than 10 years, 15 years, 20 years, 30 years, 50 years, things like that. In long term, you need to understand that there's a lot of research which will happen before you invest in a stock. It can't happen once you enter in the stock. So in this long-term stocks, you need to do a lot of homework even before you buy. And then the rest is just you try to just gauge and see, read those management commentaries, understand how macro level environment is changing, what are the new policies which are coming, is the company trying to adapt to it, is the company taking care of the future scale part, because you also are trying to grow with that particular company. And then that's the homework you need to do. Something like Warren Buffett does. So he has bought a lot of stocks, waited for 20, 30, 50 years, and look at where he is. So long-term investing needs a lot of homework before you enter. Second, something which is very close to me, and I like to call it as D plus G stocks, dividend plus growth stocks. There are two things which you need to understand about D plus G stocks. The first is dividend plus growth stocks are the ones which are growing at a fairly healthier rate. So they may eventually get into the category of long term. They may not. But these are companies which are showing healthy profits, they're showing healthy growth, and they also are constantly rewarding their shareholders for trusting their money with them. Let me give you an example of what I'm trying to say. So in 2014, when I joined HCL, HCL is trading at somewhere around 320 rupees. 10 years now, HCL is trading somewhere around 1800 rupees. If I take for the sake of maths, it's somewhere around 6x. So in the 10 years, HCL Tech has grown from 300 to 1800, rewarding me 6x of my money. But that's not the beauty. The beauty is HCL now gives somewhere around 80 to 100 rupees dividend every year, which loosely translate into, if I were to not, if I have not done any kind of SIP, if I've just bought a lot of shares when I joined HCL and I continued holding it, now just for me to keep the stock in my portfolio, Excel is giving me somewhere around 25 to 30%. Imagine 30% rewards just for you to, and obviously I'm not going to talk about the taxation part because that holds true for everything else as well. But just imagine that you are getting 30%, 25%, 30% annual return or annual outcome just for holding a particular stock. That's the power of DNG. The second thing which is very important for you if you were to think about going to a DNG stock is that you need to have a very, very strong, prudent, pragmatic dividend reinvestment strategy. You cannot do it. You cannot just have that money unless you are trying to live off that money as a monthly expense. Then that's a different case. But maybe for earlier stages, what you can do is, and this is where the magic happens of compounding and wealth creation, that what you can do is, say you have started investing in this. And until you find the right valuation, you can continue to invest in dividend back in that particular company itself. But what if it just grew? Now is 5x, 6x. Do you want to put that money because now the dividend yield will be less? So what in then that case you can do is you can probably look for some other newer DNG stock, and that way you can create a force of a lot of DNG stocks that continue to reward you. You can continue to invest in them and you make a lot of money. At the same time, your capital is also growing. The net return of keeping that stock in your portfolio also grows. So that is a very fantastic thing. Let me know if you want to have a separate whole video on DNG, how to identify DNG, how to do DNG. But this video is created just for you to understand that there is this concept of DNG which I have created, and that can really help you if you are here for the longer run. A lot of my DNG stocks have actually become my long-term stocks. So there is a case where you can probably club these together as well. And I'll come to how to trade in them as well. If you are someone like me who wants to hedge. The third is positional stocks. Now, positional stocks is basically you are looking at a macro level. It also underpins my another very, very rewarding principle of identifying good stocks at their bad times. When I say good stock, I mean fundamentally good stocks at their bad phase. Could be a macro level environment like Ukraine and Russia war, or maybe a factory, a fire at the factory, or maybe some kind of short-term government policy of maybe you know they've done a export ban or an import ban, whichever is impacting that
Right
particular
now, this is
stock.
happening with
Trump and whole green energy, and right now the all the stocks are correcting from their top. In that case, what you can then do is you can start buying these stocks in phased manner and just wait for their good time to return. Once the good time returns, you can sell them out. I have had a lot of suggestions in past. You can probably look companies like Amber, companies like BSC, companies like very recently Deepak Fertilizers. These had bad times and now they have look at how much they have rewarded. Kelton Tech. The list has this is very extensive because I have been a very, very uh, prominent believer of good stocks at their bad time theory, and I've been trading a lot on this particular theory. So one of the things which I want to bring upon right now about positional your DNG and your long-term stocks is the no SL theory. I do not believe in SLs in these because uh, I will only buy after researching a hell lot about these stocks. And I believe there is a use case for me to hold this for 3 years, 5 years without even thinking or stressing about a weak quarter or a week 6 months or a weak year. And I'll continue to judge them unless something governance, super governance that has just emerged. I will continue to hold them. And that's the reason why I do not put any SL for my positional or my DNG or for my LNT stocks, long term stocks. The fourth category here is swing. Stocks are generally where you buy for the time period. You're looking at charts. Something is some charts such as bottoming out. Somewhere you see a breakout where you see a further 20, 30, 50, 100% returns from it. Some could also could come because of a short-term opportunity that has arisen, like textiles, when there is a Bangladesh problem happening right now. Textile stocks can jump. Similarly, it happened with fertilizer stocks. It happens with sugar stocks. It happens with, so a lot of cyclic stocks comes into this swing trading zone. And obviously there are other stocks like FMCG and all. But the idea is that you will obviously follow a SL over here, and the SL has to be very, very ruthlessly executed if it comes to that. But you are looking for a better outcome because you are buying a stock as a outcome of some of the research you have done. For swing trading, it is very important for you to follow SL, follow outcomes. So you need to know when to exit. Often people get into this greed phase because they were like, okay, should I wait for 5 more percent? Should I wait for 10%? And then if the stock reverses for some of the reasons, or maybe of the stock reasons, or maybe the market reasons, you will feel trapped. And that is where you need to be ruthlessly SL driven for a swing trades. The last of this lot is what I call as momentum trading. Momentum tradings are, think of them as scalping. My last theory, the IPO theory, is based on momentum trades, where you quickly enter, have a very, very specific SLs, very, very specific targets. You quickly enter, you make that money, you exit. Momentum trades are usually done with very strict SL. You cannot be a momentum trader without having a very strong appetite of risk and an acceptance that taking SL doesn't make me a weak person. In fact, it makes you a strong person. It's like you're driving a very fast car in a very, very huge traffic conditions. You can only uh, reach early if you know how to apply brakes. So that's very important. Momentum traders usually have to also be aware about market conditions. So they need to read a lot after, especially after buying a stock, and they need to be very quick with profit booking or SL taking. These are the bigger five things. Now, time frames, how to, what is the ideal percentage return and what is the ideal time frame you need to invest. So for that, let's understand this part. Any momentum trade is basically 7 to 10 to 15 to 20, 25%, maybe at times 50%. The line blurs here. Average typical wait time could be 1 day, 1 hour at times, to maybe 1 week, 1 month, 6 months, or maybe 9 months. The swing trades are usually starts from 1 month, go somewhere around 1 year, 18 months, 2 years at max. The positionals, and this is the duration, the time it can potentially take for you to reach that particular stock. So imagine if you're going for a 20% returns, it may happen in a week, it may happen in a year, but if you're making a 20% a year, it's good enough. So swing percentage is somewhere around, it starts from somewhere around 15%, goes till somewhere around 2x or maybe 3x. Duration is from 1 week to somewhere around 2 years. The third is positional. For positional, you look somewhere around doubling, tripling, or 5xing your money. Average wait time starts from somewhere around a year to maybe 3 years to maybe 5 years, depending on how longer your targets are. DNG and LNT, both long terms, and DNG both should typically be kept into your portfolio for not less than 5 years at least. You can decide how long you want to hold them. So this is how The percentage and the time period of holding is decided for these five categories. Now, how to invest? This has been the question because people like, should I be a momentum trader? Should I be a swing trader? Should I be a positional trader? Should I just keep everything in long term? Should I be a DNG trader? The answer is it is you who will decide that. The kind of person you are, the kind of risk you take, the kind of need you have. Again, going back to same framework, but marrying your outcomes with your objectives. So if this objective is to buy something for your retirement, you are going to hold it till you retire. If I am buying something for my daughter's uh, wedding, I will hold it till she's getting married, she's near to her marriage age. If I'm buying something because I need to pay off my, say, NPS after 6 months, I will have that logic. So you need to understand that unless you marry your outcomes, your objectives, you'll never be satisfied. You'll continuously be in this state of feeling very, what's the word, chaotic or unsure, or you panic a lot. The objective of trading is to make you feel calm, get you some secondary source of income. At For a lot of people, therefore obviously there are people who make trading as their sole source of income. For them, they already know because they are doing this for as a full-time job. How to invest? Again, coming back. So once you decide what kind of person you are, you can probably pick and choose on what suits you. The other way also is putting a lot of eggs in different baskets. So you try to hedge. This is what I do. So I have a very close LT and DNG stock uh, category or container. Then I also have a positional. Uh, I have invested some money in positional. I have invested some money in swing trading and some money in momentum trading. Now I'll tell you how I have done. Maybe this can inspire you to create your own shuffling of funds as per this. But here's how I do. Uh, so, so think of it as every container is a percentage of its own. So if I'm investing 100% of my money and say my LT and DNG takes care of somewhere around 50%, another the 30% is for swing trading, and then 20% is for sorry 15% is for swing trading, and 10% is for momentum, that it gives me somewhere around 25% for my position. So how I do it, this is how I do. So I have currently 60% of my money parked in my long-term and DNG shares. The next 20% is for the next 15% each is for swing and positional. And I have 10% money left for my for my momentum trading. Now, take every category as a container on its own. So what it means is if I am putting 20% of my money in long term and 20% of money in DNG stocks, at max I will have 5 to 7 stocks there. So that I don't have more than 3%, 5% each. But overall, what it means is say if I'm allocating 20 lakhs for my 20 as my 20% for my long-term stocks, then at max I'll have 5 or 7 stocks, not more than that. Only then you will be able to concentratedly make money in those. And same goes for your DNG stocks. DNG stocks can be little thinner than PLT because the valuation makes a lot of difference. The dividend yield makes a lot of difference. So then you can probably look for newer dividend yield stocks. So that's it. For swing, say, suppose if I have a 1 lakh rupees and I want to do a swing or a positional, I let max go for a pocket of 2 or 3 stocks. Especially in positional, I'll not put more than 2 stocks, 50,000 each, and you put it for 2x, 3x, whatever is your objective. For swing, if I have 1 lakh rupees, I let max put it into 5 stocks, 20,000 each, and I'll use it for the rotation as we discussed. For momentum, maybe I'll follow the same swing concept, maybe 10, if not 5, 10,000, 10 stocks each. and I invest for 10%, 12%, 15% as per my need. Now you need to decide which percentage is making sense for you. I'm going to leave a image when I am talking about this so that you can see the containership and how I have decided the percentage of outcome and how I have ensured what is the expected timelines to get this out. So this is basically how you need to trade as per the the risks you take, the greed you have, the outcomes you want, and the objectives you had. I hope, really hope that this was helpful because this is going to help you a lot with how you want to be a better, more professionally driven trader. A professional trader is no one is none other than someone who stays calm in every situation, doesn't go with a fear or a FOMO or a greed driven traits, knows exactly how much he or she can wait, what is the tentative outcome, has invest his time or her time in reading about a stock before even entering, and is very methodical. And I hope you you get this framework right. Please comment if you want certain stock advices or names of stocks under each category. I have already done that. I have told n number of times what are my stocks for LT category, what are my stocks for DNG, what are my stocks for positional, swing, momentum. All of these have been at times frequently advised either on my channel or on my social or my digital channels like StockTwits uh, or Twitter or X, I don't know what you want to call, and the group. But the idea is for you to become better at understanding how to trade. Unless you do that, you'll not be able to make outcomes of it. Okay. So thank you so much for giving your 30 minutes again today. I hope this was helpful. We will continue to make more videos as promised. I hope you can further share, comment, and like this video, subscribe to the channel because these videos are created just for you, and I believe these can help you a lot because this has helped me a lot. And there are people who we have who I am personally in a journey from the last 3, 4, 5 years, and they have found this very helpful. And I do believe that this makes you feel that there's something good you have learned out of this video. Please continue to show your support, your love. Continue to give me suggestions where I need to make improvements. I know these set of videos are going to be very just point direct on the topic, on the content, and not uh, on the making it very beautiful, aesthetically beautiful, because I don't get time and I'm not a pro as well. But I want to make sure that I continue to help you all with the things which are more important than just gimmicks. There will be a Hindi video of this also posted. So please feel free to watch which one you prefer. My name is Apurv. This is Wealthify, and I'm signing off with just one note. Let's get rich together. And please, please marry your outcomes with your objectives. Thank you.